Hey everybody, welcome in today's video. In today's video, we're going to look at two fundamentals that are ahead of us: the CPI for the US dollar and the interest rate for the Canadian dollar. We're going to look at its impacts in the market and its predictions, how we anticipate it to play out. So if that sounds interesting to you, please do stick with us until the end. Don't forget to subscribe, turn on the bell notification, and share with a few friends that you believe will find value in this video. Now, we're going to start off with the impact. Obviously, you can see here today it's Wednesday. This is the Eastern Standard Time. So we have here at about 8:30 core CPI, MOM for March, YOA for March, and CPI YOY for March, right? CPI again, MOM for March. All of them at about 8:30. These are the previous, and these are the predictions. So we see here 0.5 for core CPI, right? And then here CPI we have for 0.2, 6.1. Here we expect to see a decrease. And here on the CPI YOY for core, we expect to see an increase. Now this is interesting, right? Because we saw that on Friday, we had a decline on the non-farm payroll, but then we had an increase on the employment rate. And then on that, it actually made the US dollar stronger, right? That made the US dollar stronger, which was crazy because meaning that the employment change actually outweighed the non-farm payroll, which is very rare to come by. Hence again in this situation here. So you see the core CPI, they're all decreasing. Here we have this decrease. Here we have from 0.6 to 0.5, 0.4 to 0.2. But here we have an increase on the CPI for the core, right? The consumer price index, right, measures the change in price of services and goods excluding food and energy. The CPI prices measure the change of perspective from the consumer, right? A higher than expected should be taken as positive, while a lower than reading should be taken as negative. Now, with this reading here, anticipate to see the US dollar come out stronger on the CPI. The reason for that is because I believe the economy, for the past month on the US dollar, the employment change has been stronger, and that will actually mean that more jobs will be created. More jobs being created, meaning more spending habits. More spending habits, if people have more liquid, more money, that means they'll see their consuming or the prices of goods aren't that expensive because they actually have money to spend on that, right? Rather than if they had a lack of that, they'll actually see it as, prices are actually higher. But because they had a strong employment rate, I believe the CPI will also come out positive for the US dollar. So that's what I'm anticipating to see today on the CPI. I expect to see stronger fundamentals. I expect to see the US dollar come out stronger on the other side because of the impact we had on the employment reports on Friday. Now, we also have another interesting fundamental today. That's the interest rate, CAD interest rate, Bank of Canada. Now, the Bank of Canada has been the only bank to actually stop increasing interest rates. Like what it's trying to do is actually hold it at about 4.5% all the way through 2023. Obviously, we are going to anticipate to see here 4.3 again today. 4.5 on the interest rate. So you can see even here on the deep reports, they're actually saying the Bank of Canada sees on hold even as the economy accelerates. As the Bank of Canada, its economy is actually accelerating, right? So it doesn't want to break this benchmark, right, over 15 15-year high of 4.5. So it doesn't want to increase its rate. It's holding its ground. Now, its impact is that since it's actually holding its ground and they don't want to increase the interest rates, you can see here they've been holding steady. They held steady here, all holding at about 4.5. They don't want to keep increasing the rates. Now, this will actually make the Canadian dollar to be stronger because they're actually not increasing rates. Unlike the other currencies that are actually just increasing rates, the CAD is actually holding its ground. Now, this will actually make it as a safe haven because investors don't want to invest in a country where their interest rates are actually higher. They want to, make sure that they get good prices investing in a country, right? Now, since this one is actually holding its interest rate steady, it will actually make the CAD to actually come out as stronger. So yeah, that's my analysis for the CAD. I believe the CAD will actually come out 4.5 as normal, as it's holding its ground until the end of 2023. But mind you guys, just because they're holding their interest rate at 4.5, it doesn't mean that it will always be perceived as a positive impact on the currency. So as time goes, you also need to look at the investor's perspective. For this month, I believe it will actually come out positive. It will actually be a good thing. But in the long run, approaching the end of the year 2023, we don't know how the economy will be. So it doesn't always mean just because they're holding steady, it will always be stronger. So you need to be careful with that. You always need to look at the perspective from the investors and the other factors, such as the inflation reports, right? Because those are actually the reports that actually put really in perspective what's really going on with the economy. But for this month, I really have a strong feeling that the interest rates will actually give a positive impact on the US dollar. So, excuse me, on the Canadian dollar. So, let's just see how it will play out. Obviously, it will come out at 4.5, but let's see how it will actually impact the CAD. I won't really be focusing on the CAD today. I'll be focusing on the US dollar for the CPI. So let's just wait and see how prices will actually come out on that. Both of the fundamentals, expecting to see the US become stronger and the CAD become stronger. So thank you for listening. Thank you for your time. Obviously, this is just my analysis. It shouldn't be taken as any financial advice. As we all understand, like fundamental analysis, just like technical analysis, isn't 100% certain. It's just an edge in the market of understanding what's really going on in the economy. So with that being said, I really appreciate your time. Thank you for tuning in. Please do subscribe because you don't want to miss out content like this as we drop them on a daily basis. Take it easy out there and have a great trading day. Peace.